So let's talk about one of the hot topics out there at the moment. Is there going to be a stock market crash in 2023? Let's take a look at what potentially could cause that, and if there was a crash, what I would do. So this has been really popular, I think, on the lines of, is PayPal a buy and is there going to be a stock market crash in 2023? Those have been the most two popular topics that I've seen out there at the moment, and today I thought I'd give you my updated thoughts. So let's get started. So August has been a horrible month for the stock market. If you look at the S&P 500, you can see here it's down around about 4.76%. But looking at pre-market today, it's going to be down once again. So we're probably going to see this go over 5%. If we do go into 10%, that would be the official correction mark. If we do go into 20%, that is where we would have an official crash. Now, the big thing that I think a few people are feeling is when you look at the Russell. The Russell is obviously smaller cap companies. And if you look at the Russell, this here is down 7.6%. Today we're probably going to be down over 8% in the Russell, and for me personally, as someone that invests more into the smaller caps, I'm feeling this drop probably more than others, because when you look at the Russell, for example, that's down more than the S&P 500, and this is actually what we had in 2022 when we had the stock market crash in 2022. It was a while until the big tech started falling, and then eventually it did start falling, but the small caps were absolutely devastated. You know, they dropped way before the big caps in 2022, and also they dropped a lot more in 2022. So that's why if you're a little bit more of a smaller cap investor, a little bit more maybe of a growth stock investor, you felt the drop in 2022 a lot more, and potentially that is why you're feeling it a little bit more now. And it's a bit strange to see, because actually when you do look at the valuations at the moment, the Russell is by far historically a lot cheaper than what it normally is, and you look at the S&P 500 and it's a lot more overvalued than what it normally is, which is the really strange thing that is happening at the moment. So just thought I'd point that out. Now let's look at 2022. Obviously 2022 was the first stock market crash we've had for a long time. Well, we've had one in the CV times. 2018 was the other crash that in my investing lifetime that I saw. It never got actually registered as a crash because it was down 19.8%, but it was pretty much a stock market crash. And this is the worst stock market that we've seen since 2008 in 2022. And the S&P had a horrible year in 2022. And any of you guys that was invested in 2022 would have known about that. So let's look at what caused the stock market crash in 2022, and are any of those things kind of around right now which caused it to have such a bad year. So as we go into 2022, the first thing that started happening was obviously the Russia-Ukraine situation. The first European war I think we've seen since 1945, since World War II. Obviously that made a few people panic a little bit, and that had the knock-on effect where companies decided to leave their business in Russia. So you had the tough comps from there. You also had a lot of cost pressures starting to increase, and the likes of inflation as well being caused by this, especially by gas prices as well. So June, you can see here, the inflation was going absolutely crazy in 2022. That was causing a lot of pressures on companies and the economy. Natural gas, oil prices, they went absolutely crazy. As you can see here, we went from around about 98 up to at the peak of around August 2022, 559, absolutely crazy. You look at the container costs went absolutely crazy as well. When we started getting into 2022, when they started peaking out around mid-2022, you've seen container costs absolutely skyrocket massively. So that was obviously a lot of pressure on freight costs for companies. And when we look into 2023, the combination of oil prices, inflation, container costs were affecting companies' earnings and the consumer. Now, how many of those pressures continue into 2023? Well, obviously the Russia-Ukraine situation is still going on. However, it's not focused on mainstream media, and I think obviously the tough comps from companies leaving or exiting their business in Russia has obviously now been priced in, because we are over a year. Inflation has basically peaked, and we are very close to 2%, which is the Fed's target of 2%. Inflation is a lot better than where we were a year ago. That should see us go around about 2% by the end of the year. So that is pretty much an issue that has been resolved. Still a little bit to go, but we're pretty much there. Gas prices, oil prices, obviously they are now back down to where they were before the whole Russia-Ukraine situation. So that's no longer an issue at the moment. And when you start looking at companies' earnings, obviously companies' earnings were getting affected by this issue, as you can see here. But as we enter 2023, you can see the recovery starting to happen in the earnings now. And we are starting to get to a point where if we look at where we were at Q1, we're actually higher than where we were in Q1 2021. And a lot higher than where we were in Q1 2022. So the earnings are starting to recover now. So you can see companies are starting to do better from the situation with lower costs, the inflation issues. So from a recessionary point of view or a weaker economy point of view, we're actually in a pretty good place at the moment, so that's obviously really good. However, the frustrating thing in the last few weeks is seeing that, as we see here, the earnings recovery is happening, but the stock market, especially in August, when a lot of Q2 earnings have happened, we've seen a lot of companies take a massive beating, and I've seen that personally, and it has been very frustrating as a shareholder. An example of a Russell 2000 member, which is InMode, for example, they brought out some fantastic earnings. EPS was very good, growth of 19%. They hike up their outlook, they have a triple beat. And it's an example of a stock like that is down 18% in last month. And it's a bit frustrating to see that this company here is progressing so well, and yet the share price is rewarded with an 18% drop. You look at the likes of HIMS, for example, it's down 25% in the last 6 months. If you do look in the last month, the stock is down 24%. Same again, you get a company here that beats EPS, revenue beat, EPS, revenue growth of 83%, hike up the full year, and once again, what's the company rewarded with? It's rewarded with a 24% drop. And if you look at PayPal, for example, same again, this company here, pretty decent earnings, and this is another example of a stock that's down 21% at the moment. And there's a whole list of stocks that I could use on here that are good examples of companies that have smashed their earnings, smashed the Q2 earnings, and yet the share prices are dropping off these kind of this news at the moment. So I guess the point now is, why is it kind of dropping at the moment? Why is the stock market having this weakness? Even though at the moment a lot of the pressures at the moment from 2022 are gone, the earnings are doing pretty well. We've seen in Q2 the earnings have been pretty decent as well. Why is the stock market at the moment now having this drop? Well, at the moment, the first point is probably to point out we have had a good year. You know, when you do look at the stock market before the drop, the S&P, for example, was up 20%. So there is going to be some form of profit taking probably going on this time frame. You know, we can't keep going up and up forever. I know a few people would like us to do that and go up and up every single day, but it can't happen. You know, otherwise we end up at, you know, really stretched over valuations, and we'll have a snapback. So we are due to have a correction at some point. So you could just say it's just day-to-day market moves, and we were probably due when in the time frame, especially when you look at June time frame. If we look at where we were at the back end of June or May time, you know, by the end of May time, the S&P rallied up over nearly 8%. So to give some of that back is probably a fair thing. The other thing is that probably there's people missing the rally. You know, there's a few people that have missed the 2023 market. You know, there's a lot of people on the sidelines in this time frame here that went, oh, the market's just going to get lower, it's not going to get any better. And a lot of people were out on the sidelines and have missed this rally. So for a few people, they're kind of wanting the market to go down so they can actually buy back in, because they have missed this rally and they've missed you know, a really good chance to get stocks for cheaper. So there's probably a few people personally pushing their own agendas out there to get the market go lower. And also there's a few people that always get the limelight that shouldn't get the limelight for predicting crashes. And you can never predict a stock crash. You know, this is the crazy thing at the moment. There's a lot of people saying, you know, there's going to be a crash, there's going to be a crash, there's going to be a crash, or 2023 is going to be a stock market crash. It's been nearly impossible to ever predict a market. So if there was going to be a crash this year, this would be the most predicted crash in the stock market, which would not make sense. So that's obviously something to kind of, you know, when you think about 2020, no one thought there was going to be a stock market crash in 2020. CV situation happens. 2018, you know, that wasn't really predicted. And there's a point where at some point everyone keeps shouting crash, 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 that eventually the market goes, let's just have a crash, because there's that much fear out there. Let's just have a drop to make everyone happy that, oh, look, we said there was going to be a crash. We can move on from that now. And I think that's something that I saw potentially as well. You know, when we were in 2020, there were quite a few people were saying like, oh, we're in like a 10-year bull market now. We're way overdue a crash. And a few people wanted that to happen just because we'd been on a bull market for too long. And it's the likes I've seen there, for example, the likes of Michael Burry starting to get the headlines a little bit. You know, Michael Burry starting to get the headlines about, you know, predicting a short, and he thinks there's going to be, you know, another market crash. But the thing is, when you look at like the likes of Michael Burry, that always seems to get the headlines about crashes, especially when there's a little bit of weakness. Everyone goes, oh, even Michael Burry says there's a crash, because he once predicted the stock market crashing in 2018 and he got a film made about him. You know, when you look at the other things, you know, he's saying in 2015 there's a crash coming. What happened? Boom, the stock market, you know, rallied up. You know, 2017 there's going to be a global financial meltdown. You know, boom, you know, you missed out on another rally. September 2019, it's in index. They're in a bubble. You know, if it wasn't for the CV situation, which he wasn't predicting. You know, you could kind of say he was a little bit right, but you would have, you know, sure, you might have had a 3 months of going, oh, I'm right, but then you would have missed out on this rally. 2020, you know, right at the bottom of the CV Times, he reveals he has a massive bearish bet. I mean, absolutely punished on that one. 2021. There's a bubble crash coming, and though I believe there was a little bit of a bubble at that time, but even so, you know, you would have been much better off, you know, shorting from there. I mean, you would have only been in 2022, maybe a little bit better off from that point of view. September 2020, more failures coming with the banks. Obviously, that was the bottom of the market. Recession 2023, rallied up from there, and now once again he's starting to make claims that he's shorting the S&P, and it's like, you know, so many people get this attention where they get one thing right, and then you look at the track record and going, how is this guy still getting airtime? Like, if you look at in the last kind of few years, 1, 2, 3, 4, 5, 6, 7, 8 bad claims made in the stock market, but just because he got one right, you know, this is the guy, this is what the media kind of focuses on. And that's the big thing from the media's point of view. Like, the media loves it. You know, from the media's point of view, you get so much more attention and views and bums on the seat with fear. You know, 100%. You know, the stocks I get asked about all the time is stocks that are down. You know, for the last 12 months, I've not had a single question on HIMS. But yet HIMS is down in the last few months, and all of a sudden I've got a lot more comments about HIMS in the comment section because it's down. And this is a big thing from media's point of view. They make more views, more money from pushing this out as well. They got more views, more people watching, even on YouTube. I'm not gonna lie, like me making this video here, I'm gonna get more views probably on this video than all my other videos because it's a fear video. You know, the title is and the thumbnail is more fear based, and it will get more views, and you'll see the whole all the YouTube scene as well, you know, will focus on red days because that's the way you get the most views on YouTube and the most viewed videos that you get. So you've got to realise that from a kind of a media point of view, that these are the guys that are kind of getting attention at the moment. Now, realistically, what is the big threat in 2023? Because it's none of the threats that we've seen from 2022. The big threat is the Fed. The Fed is the biggest threat out there, with interest rates going higher and higher and higher. And you can see here, it's the fastest hikes that we've had in 40 years. And you look at what potentially that does. Higher Fed interest rate means it's more expensive to borrow money. If it's more expensive to borrow money, the consumers are spending less. If consumers are spending less, companies have less earnings, they have less revenue, they start cutting staff. That cycles around where people start losing jobs, there's even less spend. So the interest rates going higher hurts the economy. It hurts it, and that's why the market was hoping they were going to be pausing the cuts or completely cutting the cuts or bring them down. But yet we've seen this year more and more happen. I personally thought the Fed would stop hiking up these interest rates in probably about May time, April time. But they keep putting them up more and more, and that's just hurting more and more of the economy. And the thing is, at the moment, what the commentary is at the moment is they're going to continue to put them up more and more and more. So we thought the pause was coming, and the market likes it when it pauses because companies can then plan around the Fed rates, consumers know what they're going to be. But the more they go up and the faster they go up, it's just going to slow the economy down more and more. And for the last year and a half, we've avoided a recession. The economy has done very well. Like, we thought that people thought that if the Fed was going to do this, the economy would crash, and it hasn't. But there is a point where there's so long before it falls off the edge, and that's what people are worried about. And I've personally been worried about. I've said on the YouTube channel for the last year, the biggest risk to the stock market is the Fed and Jerome Powell. And that is still the case, and it looks like that is starting to get priced into the market a little bit as they continue to hike and they show no signs of stopping. Now, like we said, at the moment, we've avoided it. The panic was in 2022, we would hit a recession, and technically we did hit a recession, and people don't talk about this. We did have our recession in 22. We had the stock market crash, we had the recession in 22. But people are thinking it's going to happen again. Now, at the moment, it's not happening. The growth is still happening in the economy. You can see here the latest forecast is that we're still going to hit growth in Q2 as well. So we're not seeing any signs at the moment. We look at the job growth. This is the big thing. Job growth. As soon as jobs start getting cut, that's the big issue to the economy, and it's still holding up strong. However, the cracks are starting to show a little bit, and that's the little bit of issue that we're starting to get at the moment. So this is the risk of the stock market crash in 2023. Higher interest rates, consumers stop spending, the economy stops growing, job cuts, people stop spending more because of job cuts. That is the big issue that we have, and that's the one to watch, and it's looking more and more likely that that could happen, and I've always said that's the biggest concern. Now, the big thing is that if we are going to see this happen, then what we would potentially have is inflation rapidly drop, and we could hit deflation, and in that point of view, the Fed would then start cutting, and you would have the interest rates, start coming down, and then the economy would recover. The problem is by then, as the Fed typically does, is it's very slow to react and the damage is already being done, and that's the issue that we have the potential to happen at the moment. Now, consider this is all short term. This is what could potentially happen in the next 12 months. What do I think in the longer term? Well, in the longer term, this is the chart I always show. There's all these issues, but in the longer term, you will probably forget about it. You'll forget about it, and the S&P will do very well because companies' earnings will grow in the longer term, and the stock market will do well in the longer term. During all of this issue here, all these issues here, these were major issues, and there was little bumps in the time frame, but you forget about it and you move on. The market does very well. All during these time frames, there's between the CV situation, the North Korea, Argentina defaulting on its debts, North Korea confirms successful testing of nuclear device, multiple terrorist attacks, S&P downgrades US debt rating, we saw that one before, earthquakes, oil spillages. We've seen so many issues in the world, but they have bumps in the stock market, but in the longer term, when you zoom out, it's not that big of an issue. So for me, I won't really be planning on what will happen in the next 12 months, and all that I'll be doing is creating opportunities. It'll just create opportunities on these dips like here where I can pick up some shares. And that's what I'm kind of looking at. I'm just looking at the longer term picture and thinking all this is dips for me in the longer term, that when I look back in 2025, 2027, I'll look back and go, oh, do you remember when the Fed went a little bit too crazy on the interest rates? It won't be that much of an issue if I've bought the right stocks, and that's the main thing that I kind of focus on anyway. So all I look at is a bit of a buying opportunity. But there is definitely issues in the short term, and I can see why the market is kind of having a bit of a wobble at the moment. Anyway, so thanks for watching, guys. If you could hit the like button if you're new around here, subscribe, and I'll catch you all in a bit.